Okay, well, good morning, my dear students. In this video, we have to discuss few new transactions which are affected to our chapter dissolution of partnership firm. So, before going to discuss about the new transactions, just we have to read the question what the information is given. Following is the balance sheet of Hari, Giri and Suri as on 31st March 2020. They are given balance sheet, liabilities, amount, assets, amount. Under liabilities, creditors, bills payable, capitals, Hari, Giri and Suri, three partners capitals they are given. Asset side, cash, bank, bills receivable, stock, debtors, PBD, land and buildings, profit and loss account they are given. Balance sheet total is 35,000. So in the next line they are given the information about. The next line they are given the information that the firm was dissolved on the above date. The assets realized as follows. Bills receivable rupees 3,850. Debtors 5% less than book value. Unrecorded asset realized rupees 150. Suri took over land and buildings at 10% more than book value. Bills payable taken over by Hari. Expenses of realization are rupees 450. For this, prepare necessary ledger accounts, that is realization account, partners capital account and as well as bank account. So here two values they are given, cash and bank. Which one we have to prepare? Whose value is higher, we have to prepare that account only. My dear students, once again go through the question without any mistakes. So later on we have to move to the solution. Okay, my dear students, first we have to read the question and classify the transaction. Later on, we have to move to the solution. So here, following is the balance sheet of Hari, Giri and Suri as on 31st March 2020 was as follows they are given. But in this question, they didn't given ratios, profit sharing ratio they are not given. Whenever profit sharing ratio is not given, means we can assume that these three partners are the equal profit sharing partners. We have to imagine these three partners are the equal profit sharing partners only. So here, liabilities given, assets here. First we have to classify the transaction. Which one will come to the consider as a liability, which one should be considered as a partners capital transaction, that we have to classify here. Creditors, it will come to the liability, step number 2. Bills payable should be considered as a liability, it is also come to step number 2. Capitals will be considered to partners capital account opening balances. So this transaction left hand side of the present balance sheet. When come to the assets, both cash and bank will come to the bank account only. Here we have to prepare bank account only first. Why we have to prepare bank account only means the bank balance is the highest value, though we have to prepare bank account. Suppose the cash balance is highest values, we have to prepare cash account, but both values we should add it, that will be considered as a opening balances. And remaining all the assets we should be considered as a step number 3 of realization account, that is the credit side we have to record it. And realization account, sorry, step number 1, not 3, step number 1. Here profit and loss account belongs to partners capital account transaction. Partners capital account, we have to transfer the debit side of partners capital account according to the ratio 1:1:1. Because the ratio is not given, we have to imagine that these three partners are the equal profit distribution partners, equal profit sharing partners. Though the firm was dissolved on the above date, so on the above date the company is going to wind up. So here the assets realized as follows, they are given. Number 1, bills receivable with 3,850. Debtors 5% less than book value. Less is nothing but minus. We have to deduct. From which value we have to deduct it? From the original value of debtors. So here the book value of debtors we should consider as a 100%. So 100% minus 5%, we will get 95%. So 95% is the present market value of debtors. We have to consider that 95% means how much will be there, that we have to classify. And also an unrecorded asset realized. The company has forgot to record one asset at the time of preparation of the balance sheet, but that asset they identified and they sold into the market. They will get an income of rupees 150. Totally adjustment number 1 will come to step number 3 of realization account, and it will come to again bank account. 2 times we have to record it, the adjustment number 1. Next adjustment number 2, what it will say? Suri took over land and buildings at 10% more than book value. They are given. More than is nothing but added to the book value. Land and building value, what they given in the balance sheet, that is 100% plus 10%, 110%. That 110% means how much will be there, that we have to record it in the realization account. Step 5. Step 5, and again it will come to the partners capital account. We have to record it. Bills payable taken over by Hari. Here Hari is a partner who is taken over the liability. Liability taken over, it will come to step number 6 of realization account, and it will come to partners capital account as well the opposite direction, that is credit side. We have to record it. Expenses of realization are rupees 450. So this will be comes under realization account. Step number 7. Always realization expenses will come to step number 7, and it will come to bank account. So each and every adjustment we should be recorded into 2 times as per the accounting criteria. Based on that only we have to move to the solution. We have to move to the solution by drawing the columns of realization account, partners capital account, as well as the bank account. We have to draw the columns for realization account. we should draw the columns for realization account. Under realization account, we should follow the steps. Based on that, we have to preparation of the realization account. First, we will draw the columns for realization. So we will get debit and credit. Particulars amount. So this is the columns for realization account. I think you people have know very well. So based on this, we have to follow some steps while preparing the accounts only. From the step number 1, always we should write debit side to realizable assets. At book value, we should underline this one. This is the step number 1. So we should record all the realizable assets at book value. So which are the assets they are given with? So first one is bills receivable. Bills receivable. The value of bills receivable is 4,000. First we have to write. Later on, stock 9,400. This is the value of stock. After stock, debtors. The value of debtors we should given in the inner column is 3,000, and the same time they are given PBD. PBD always come to the credit side by PBD, that is 300. We should write directly to the amount column only. After that, land and buildings. Land and buildings. The value of land and buildings is 12,000. So this is about step number 1 of realization account. We have to frame this one. Step number 1 we have to complete it. Let's come to step number 2. Step number 2 always come to the credit side by external liabilities. At book value, we should underline this one. This is about step number 2. Under step number 2, we have to classify already 2 liabilities are there. One is by creditors. That is 2,400 rupees is the value of creditors. Another one is a by bills payable. The value of bills payable is 5,400. 5,400. This is about step number 2. In the first step, we should record the assets on the book value. Step number 2, we should record the liabilities on book value. Let's come to step number 3. So it will come to credit side only by bank account. Directly we should write bank account. In profit mention that assets realized. Assets realized. Assets realized details where it is available means it is always available in the adjustments only. The assets realizable adjustments, they are given in the adjustment number 1. The assets realized as follow. So here all the assets they are given that realized by bills receivable 3,850 by debtors. So for debtors they are given 5% less than book value. So we can imagine what is the value of debtors is have to recorded in the step number 1, that will be considered as a 100% asset, 100% value. So for this 100%, less means we should deduct from that 100%, add more means we should add to that 100%. So here what they are given? Less. So 100 minus 5, we will get 95%. That is 3000 into 95%. Therefore, we have to get 2850 rupees is the present value of debtors. Apart from that, they are given one more thing, unrecorded asset. So the value is 150 rupees. So any other asset they are given in the adjustment number 1? No, they are not given. Adjustment number 2, what it will say? Suri took over land and building. So here one asset will be taken over. Before making that, just here we have to check. Bills receivable is there. Debtors we should write, and land and buildings will be taken over. But one asset is missing. Which is that asset? That we have to write in the book value as a realizable value by stock. The value of stock is 9,400 rupees they are given. So 3 assets are sold, 1 assets are taken over, 3 plus 1 is 4, which is equal. Therefore, the total of this is 16,250 rupees we have to get. That is the total of assets realized which we have to wrote in the step number 3. Come to step number 4, to bank account. So what we have to wrote in this? So liabilities paid. Liabilities paid. The company will have only 2 liabilities. One is creditors, another one is a bills payable. But bills payable will be taken over, it will be given in the adjustment number 3. So it will come to the step number 6. Then step number 4, how many assets will be remain? Only one liability will be remain, that we have to write here. To bank account, enter that creditors. Directly one value is there. The value of creditors is 2,400. We should write directly. Step number 4 is completed. Step 5. What we have to write? By partners capital account. In that we have to write. So Suri has took over land and buildings. Suri capital account. That is in bracket land and buildings taken over. That is 10% more than book value. That means 12,000 into 110%. Therefore, we will get 13,200. This is about step number 5. Let's come to step number 6. Two partners capital account. In bracket, we have to mention that Hari capital account. In bracket, bills payable taken over. So the value of bills payable is given in the step number 2. We have to write 5,400. Directly we should write 5,400. This is about step number 6. Step number 7 always related to realization expenses. We should write to bank account. In bracket realization expenses, that is value 450. So now we have to close the realization account. How to close means by making the total of both the sides we will get the realization profit or loss we have to get. according to this solution, just imagine which side we have a highest value. Whether the debit side we will get the highest value, or else credit side we will get the highest value. According to this question, with the total of credit balance, credit side is highest balance, that is 37,550. 550. Same value we wrote here, 37,550 rupees. Out of this we will get all the things. We will get the difference. The difference is rupees 900. For this we will do the need to partners capital account, in bracket we have mentioned profit. What we have to do this profit? This profit we have to distribute it between the partners. That is, first partner is Hari, Giri, Suri. 900 into 1 by 3. 900 into 1 by 3. Again 900 into 1 by 3. Therefore, each partner will get 300 rupees. Each partner will get 300 rupees as the profit on realization. So apart from this, we have to move the remaining two steps, that is preparation of partners capital account. My dear students, this is very clearly given. You have to read well and you have to solve the question. Very simple question is given. So like this examination also, they will be asked like this question only. So this is about realization account. Let's see how to move to preparation of partners capital account. Partners capital account. So we have three partners. So we will fulfill the conditions. Particulars Hari, Giri, Suri. Again particulars Hari, Giri, Suri. We should write debit and credit also. First we have to draw the columns. First we have to fulfill the conditions what they are given. So in this question account, first we have to transfer opening balances by balance brought down. Where the balance is available, always this opening balance is available in the previous balance sheet under liability side. So first partner will have the opening balance of every first partners. In the same balance sheet, so in the liability side, they didn't given reserve fund, they didn't given any other funds. But in case of the asset side, when come to the ending, they are given profit and loss account. So that means that is undistributed profit that we have distributed in this occasion. So we have to write opposite side, that is left hand side, to profit and loss account. The value of profit and loss account is 900 into, we have to distribute it 1:1:1, 1 by 3, 1 by 3, 1 by 3. So each and every partner will get the share of 300, 300, 300. While making the addition of these three, again we have to get 900. 3 plus 3, 6 plus 3, 900 only we have to get it. So these two transactions we have to taken from the previous balance sheet. Let us we have to see about realization account. In this realization account, somewhere we have to write two partners capital account and by partners capital account. That amount we have to transfer opposite direction of the account. In the step number 1, we did use the term partners capital account, but we wrote realizable asset. Step number 2, here also we did use the term partners capital account. Step number 3, here also we did use the term partners capital account. Step number 4, here also we did use the term partners capital account. Step number 5, we wrote partners capital account. Which side? Credit side of realization account. We wrote by partners capital account, under that Suri capital account. What is taken over? Asset taken over. That is credit side what we have to wrote, that will be transferred to the debit side of the next account. So whatever we wrote here, that will be transferred to the opposite direction, that is to realization account. Realization account, in bracket, land and buildings taken over. So who is going to take over? Suri. What is the cost? 13,200 rupees is the cost of that land and buildings which is taken over by the partner. Then it comes to ends with step number 5. Under step number 6, again we use the term to partners capital account. Here we are wrote Hari capital account because bills payable taken over. Bills payable is a liability, so it will be recorded debit side of the partner realization account, that will be transferred to credit side of realization account. We will write by realization account. By realization account, in bracket, bills payable taken over. So who is taken over now? Bills payable, it will be taken over by Hari at a cost of rupees 5,400. Will give hyphen for both the partners. And let's come to the realization account. Again, step number 5 and 6 is completed. Step number 7, we did use the term partners capital account. But step number 8, we use the term partners capital account. What is that? Profit we have to get, that we have to distribute it here. That will transfer to the credit side of the next account. That is by realization account. In bracket, profit. Already we distribute this profit 300, 300, 300. 300, 300, 300. First, all the transactions we transferred here. Now it's time to close the realization, partners capital account. Leaving the space of 3 to 4 line, we have to close the partners capital account. So first, we have to close the capital account of first partner, that is 10,000 plus 5,000, 15,400 plus 300. So 15,700. Same value we transfer here, 15,700. Out of this 15,700, deduct the 300, we will get 15,400 from the account of Hari. For this we will give a name to bank account. in bracket capitals balancing figure. Next come to the second partner, 11,000 plus 300, 11,300. The same value transferred to debit side also 11,300. Out of this minus 300, we will get the difference is 11,000. Well, let's come to the third partner. Here we have a confusion. Which side we will make a total? Whether we have to take a total of left hand side, whether we have to take a total of right hand side. So here in this question, right hand side, left hand side, only highest value, that is debit side, we will get the highest value. 13,200 plus 300, 13,500. So the same value we transfer here also 13,500. We won't get difference in the debit side, we will get the difference in credit side. For this we will write to bank account. So therefore, first two partners we won't get any difference. So out of this we should get 13,500 minus 6,500. We will get the difference is 7,000. For this we will give a name bank account. So this question is totally different from the previous questions. My dear students, please try to understand the situation. According to the situation only, we have to move to the solutions and all. So here we will get the differences both the side, that is left hand side also we will get the difference, right hand side also we have to get the difference, but these differences will be transferred to the opposite direction of every account in the next account, that is bank account. Okay, my dear students, let's to prepare bank account. We should draw the columns for bank account. Particular sum and particulars amount. So for this bank account, first we have to transfer opening balance. We will write two balance down 4,000. Again to cash balance 2,000. Cash balance 2,000. So this is the values first we have to transfer from the balance sheet. So just once again check it your balance sheet, old balance sheet, whether they are given any partners loan, that is Hari loan, Suri loan, Giri's loan, anything they are given means we have to write, otherwise don't need to write anything. So ignore that one. Next come to the first account. In this account somewhere we have to use the term bank. That values we transfer to the bank account only. Let's come to see. The step number 1 we did use the term bank account. Step number 2 also we did use the term bank account. But in the step number 3 we use the term bank account. By bank account, whatever the value we should write in the credit side, the same value transfer to the debit side of the next account. We will write to realization amount. In bracket assets realized. So assets realized. So value is 16,250. This that is the assets realized which we have to calculate under step number 3. Let's come to the step number 4. Again we have to write the term to bank account. 2 will become to the buy side. What is the creditor? That is there. Despite 2,400, that value we write here by realization amount. In bracket liabilities paid. The value is 2,400. Step number 3 and 4. Step number 5. What we have to use? By partners capital account we have to transfer. Step number 6. Again two partners capital account we have to transfer. Ignore. Step number 7. Two bank account. Again what we have to use? Two bank account. What is the realization expenses? That is 450. Which side we have to have? Debit side of realization account. It will come to the debit side of bank account. By realization account in bracket dissolution expenses 450. So the first account is completed. Let's come to the second account, that is partners capital account. In this account somewhere we have to use the term bank account. So first we have to see, so debit side we have to write two bank account that we transfer here by partners capital account. So first partner Hari, second partner Giri. The difference is 15,400 for one partner, 11,000 for second partner. And the same amount, the credit side also we will get the difference to Suri capital account. The difference is 7,000. While making the total of this, we will get the equal value. The bank total of bank account is 29,250. Same balance will transfer here also 29,250. So according to this, we have to complete the process of three ledger accounts also. So first account, second account, and third account. My dear students, the basic concepts will be completed still here. In the next concept, we have to move to the new related syllabus concept that is very precious to us, very important to us. In the next class onwards, we have to discuss that one. If you people have any doubts about this concept, you can directly contact me. I will try to solve your doubts related to this chapter only. So students, don't waste your time. Time is so precious for you people. It is an opportunity for you people. You have to learn well while sitting in the home itself. You will get good marks and you have to reach your goal, what you have the goal in your future. Okay, my dear students, thank you everyone.